Every year, more than 600,000 people worldwide are diagnosed with bladder cancer, and nearly 220,000 will die from it. In the United States alone, it's the fourth most common cancer in men, with over 84,000 new cases expected in 2026. And yet, for decades, the standard treatment came down to a single option: injecting a weakened tuberculosis bacterium directly into the bladder. When that stopped working, patients were often left with one remaining path: complete surgical removal of the bladder. That's exactly the medical gap one American company chose to move into. Before we go further, I want to be clear, this video is strictly educational. Nothing here is financial advice, and every investor should do their own research before making any decision. If this kind of analysis is useful to you, a like and a subscribe really help keep this channel going. The company we're talking about is ImmunityBio, traded on the Nasdaq under the ticker IBRX. They developed a drug called ANKTIVA, and the concept behind it is as elegant as it is ambitious. Instead of attacking cancer chemically, ANKTIVA reactivates the body's own killer cells, what scientists call natural killer cells, restoring their ability to identify and destroy tumors. Think of these cells as an elite unit within your immune system. In cancer patients, that unit has become exhausted or gone dormant. ANKTIVA's job is to wake it up and multiply it. The FDA approved the drug in April 2024 for patients whose bladder cancer had stopped responding to BCG, and commercial distribution launched the very next month. What happened next on the commercial side is what analysts have been watching closely. In the first 9 months of 2025, ANKTIVA's net sales reached $74.7 million, up from just $6.9 million over the same period in 2024. That's more than a tenfold increase in a single year, driven not by price hikes, but by growing adoption across hospitals and medical practices throughout the US. In January 2025, a seemingly technical development played a significant role in accelerating that growth. ANKTIVA received a permanent reimbursement billing code from US insurance providers. That change simplified the payment process for physicians and removed one of the biggest barriers to prescribing the drug. Then in July 2025, the UK regulatory agency granted the first international approval, marking the start of a geographic expansion that could gradually open the treatment to patients beyond American borders. Now, none of that changes the financial reality of this company, and you deserve the full picture. ImmunityBio is not profitable. Over those same 9 months, the net loss came in at $289.5 million. The company also carries a complex $505 million debt to entities connected to its founder, along with an agreement that routes a portion of future revenues to an investment fund in exchange for past financing. As of September 30th, 2025, available cash stood at $257.8 million. That figure gives you a sense of the operational risk here. If commercial growth slows or stalls, the runway tightens quickly. The question analysts are asking right now is straightforward to state, even if it's hard to answer. Can ANKTIVA's sales grow fast enough for ImmunityBio to reach financial sustainability before it needs to raise more capital and further dilute its shareholders? This isn't a promise and it isn't a recommendation. It's the story of a company that spent years burning through capital on the bet that a scientific hypothesis could become a real drug, and which crossed that threshold in 2024 with a commercial trajectory that's been accelerating ever since. Understanding how these kinds of stories work, the opportunities, and the very real risks is exactly what this channel is here for. See you in the next one.